Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The US dollar index slipped below 97.5 on Monday, snapping a three-day rally. Traders are now waiting for comments from several Federal Reserve officials this week for fresh guidance on policy. Street Louis Fed President Alberto Musalem noted that rates currently sit between moderately restrictive and neutral, suggesting limited room for more cuts without becoming too loose. Attention now shifts to Friday's PCE inflation report for clues on price trends. WTI crude briefly spiked before retreating to around 62.2 on Monday, following 3 straight days of losses. The move came as the European Union proposed a 19th round of sanctions on Russia, including a ban on Russian liquefied natural gas imports starting in 2027 and measures against shadow tankers and foreign firms tied to Russian oil. Reports suggest Iraq has increased exports just as OPEC Plus gradually eases its voluntary production cuts, adding further pressure to the market. Gold surged to a record high of $3,749 an ounce on Monday, driven by expectations of further US monetary easing and strong safe haven demand. Investors are watching this week's PCE inflation data and speeches from Fed officials for direction. That dovish outlook has already propelled gold more than 40% higher year to date. Central bank purchases, persistent ETF inflows, and geopolitical tensions have added to the rally, while concerns over tariffs from President Trump's policies keep safe haven flows strong. The yen remained under pressure on Monday, slipping toward the 148 level as it extended its pullback from last week's highs. Uncertainty over the Bank of Japan's timing and pace of rate hikes has limited the impact of its recent hawkish hold decision. Meanwhile, risk appetite in global markets has reduced demand for the yen as a safe haven. Domestic political instability and economic headwinds in Japan further weighed on the yen. In early European trade Monday, the euro rebounded to trade near 1.179. The move followed last week's Fed rate cut, which reintroduced a more accommodative policy stance. That more measured tone offered some support for the dollar, capping the euro's gains. With inflation still elevated, traders remain cautious about the Fed's next steps. Meanwhile, lingering questions about central bank independence could limit dollar upside, keeping the pair sensitive to upcoming speeches and economic data.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.